The US dollar and US Treasuries are being seen as a safe haven when markets open this morning for the first time since the assassination attempt on former President Trump. China's strong exports are set to soften as US demand wanes. India's inflation was just above expectations. And New Zealand's manufacturing sector has plunged into a deeper contraction. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ's Chief Economist for Greater China, Raymond Yeung, explains why this week's third plenum, a meeting of China's key leaders, is so important.
The third plenum is particularly important when we are looking at the economic and social policy development direction.
But first, in 5 and 5 with ANZ, the attempted assassination of former President Donald Trump over the weekend will dominate the market's focus this morning. ANZ's head of FX research, Mahjabeen Zaman, says there's often a flight to safe havens with these sorts of geopolitical surprises. She points out the closure of a key market for a public holiday today may be a factor that makes trading less liquid and more volatile.
Markets in Japan are closed, and so there might be a little bit of a lack of liquidity, which could hamper market reaction to some degree broadly. But we do see, generally in a risk-off scenario, generally you see flow into safe haven currencies like the US.
As of 4 a.m. Sydney-Melbourne time, the Aussie dollar was 67.84 cents and the Kiwi was at 61.19. Number 2, last week's reassuring US inflation figures have reset the tone for interest rate expectations globally, especially now markets are sure the Fed will start cutting in September. ANZ's Group Chief Economist, Richard Yetsanger, says that will be a key factor for other central banks to think about.
The Fed going in September, at least in the market's mind, will certainly open up some asset price opportunities and I think just encourage front-end markets to price a bit more easing in other places. We've already seen that in New Zealand. We now think Korea will ease before the end of the year. The market's been flirting with this idea maybe the Reserve Bank of Australia will hike one more. The developments in the US, I think, will discourage them from that.
Number 3, China's exports in June rose 8.6% from a year ago. That was above market expectations for growth of about 8%. Imports, however, fell 2.3% from a year ago, when there was a 2.8% increase expected. Now, that reflected weakness in consumer spending. China's trade surplus, therefore, rose to $99.05 billion in June. That was a record high and well above forecasts for a surplus of about $85 billion. Raymond says that surplus and those strong exports may not last for long.
Over the next few months, there might be a chance for China to see a softening of the export figures. And because of the slowdown of the US economy and the global electronic supply chain. So even with a very strong export number today, I would pay more attention to the increasing chance of the softening outlook over the next few months.
Number 4. India's annual inflation rate was 5.1% in June. That was a bit above market expectations for around 4.8%. ANZ economist Diraj Nim says, however, it was mostly about food price inflation, and the overall number was in line with the Reserve Bank of India's forecasts.
The culprit were the usual food prices in vegetables, fruits, pulses and cereals, which have been quite problematic for some time. All it does is vindicate the Reserve Bank of India's persistently hawkish stance and the importance of the southwest monsoon, especially over the month of July when the new crop is being sown.
Number 5. New Zealand's manufacturing sector slumped deeper into contractionary territory in June. According to the Business NZ, BNZ Survey of Services Performance, the PSI, out on Friday. The index fell 5.5 points to 41.1 in June. Remember, any reading under 50 is seen as the sector contracting. It was the worst result outside of lockdowns since February 2009.
The shockingly weak number for the month. If you look at the prior few months, there had actually been this tentative trend upwards, suggesting that the manufacturing industry was close to finding a floor. But the plummet that we saw in the most recent data suggests that, in fact, rather than finding a floor, the slowdown in the manufacturing industry appears to be gathering pace.
Miles Workman there. Now, in our bonus deep dive interview, ANZ's Chief Economist for Greater China, Raymond Yeung, explains why this week's third plenum, a meeting of China's key leaders, is so important for everyone to watch.
The third plenum is part of the 5-year political cycle of the Chinese Communist Party. They are having altogether 7 plenums, in between within this 5-year cycle. Now, the third plenum is particularly important when we are looking at the economic and social policy development direction, especially in the past that all the leaders are running a 10-year cycle, which means 2 terms, 5 years each. And the new leader used this third plenum to lay out their economic agenda and how they would like to run the country. For example, the current leader, President Xi Jinping, used the 2013 third plenum to lay out his idea of deepening reform. And at that time, he was saying that China need to rely more on the markets to run the country. Now, of course, coming to the forthcoming third plenum, he is still the leader. And in the past few years, he has already laid out his vision for 2035 for China to progress under his new era. As a phase run era will last till 2035, and then the second phase of this new era will be through to the middle of the century. Even, with his leadership for the third term, we still pay attention to the coming third plenum because after the last 5 years, we have apparently seen a lot of different changes, both domestically and externally. And we would like to see how he want to reposition China economic and social development direction so that we can gauge the overall economic outlook of China over the next few years.
So what are the key challenges that the leadership group will be talking about at this third plenum?
I think apparently that we have seen a big economic adjustment of China in the last few years, as in particular, everybody is looking at how the government is going to rescue the property market. If they don't, how they're going to change or shift the economic structure so that even without the property sectors as the main growth driver, whether there are any other economic sectors that could offset the economic downturn, what would be the overall growth trajectory of China, even if they want to push China to be a very tech-oriented economy, a very digital economy, and with a very strong technological advancement, how they are going to boost domestic demand and support consumption. These are the things from the sectoral perspective, the whole market is paying attention to. And another aspect of this third plenum will be about fiscal reform. I believe this will just be a wish list of the market because we don't know whether the third plenum will also have more details about the relationship between the central government and the local government, which is the most crucial piece of economic reform going forward, especially with the economic downturn. Local governments do not have sufficient revenues from land sales. How the central government can make use of their own sovereign credit to address the debt problem, or what we call the local government financing vehicles, or the hidden debt incurred by the local government, will also be very important to the financial stability and the overall debt problem of China. So the fiscal reform and tax reform will also be a major item in the agenda.
Raymond Yeung there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Monday, July the 15th. Catch you tomorrow with part 2 of Raymond's interview on the third plenum. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.